Hi Venkas, welcome to Adda 24/7. We are in bank promotion exam series. We have covered various objective questions earlier also. It's a regular series going on, okay? So follow the complete series which I am taking. All the objective questions are being taken. And today, earlier I had taken that lean, set off. All these questions I had taken lean, set off, and then later I had taken one more topic. And today it's risk management. Objective questions on risk management. Very important topics. Huh? So let's start without wasting the time. Okay. First one. The risk management process in the bank. Okay. In the bank refers in the bank begins from so branch or operational level, immediately controlling office level, head office level, and board of directors level. So the risk management process in any bank starts from where? Everyone. Let me see the answers from your side. It begins from where? The risk management process. Yeah. Everyone, let me see. Type it in the comment section, everyone. The risk management process within the bank begins from. Okay, it starts from where? What do you say, guys? Begins from. Let's see. Here, it is what you have to give the answer. Here, I can definitely give the answer, but the problem is you are going to attend for the exam. Okay, and that is the point. We have already cleared all these exams. So now, yes, everyone begins with everyone. Comment section. Comment section. Many of you are typing this as this branch or operational level, but that is not the right answer. Branch or operational level is not the right answer. The right answer is this board of directors level. Always things should start at the top. What the top management board of directors think, that everything runs as per that thinking only. Remember, always that is a basic rule in banking. Okay, you and me as a normal branch staff can't change the bank policies. Okay, next one. For effective risk control and monitoring, which of the following is essential? For effective risk control and monitoring, which of the following is essential? A robust management information system, appropriate procedures, specific risk management framework, periodic review and evaluation. So answer A is what? 2 and 4 only. 2 and 4. Check this very properly. B is what? 3 and 4. C is what? 1, 2, 3. See this 3 2 4. Sorry, 3, not 3 and 4. 3 2 4. This 1 2 3. So 1 2 and 3. And fourth is 1 to 4 all. Robust management information, appropriate procedures, specific risk management framework, and periodic review. So what is the answer? You think over it, everyone. I'll just give you 1 minute. So the answer is easy one, isn't it? Quite easy. The answer is D. 1 to 4 all. All the things are required. See this. MIS is required. And what is MIS? Management Information System. Means immediate whatever happens in the branch or in the banking system, immediately we should be known to the top management as well as the board of directors. Then appropriate procedures should be there. Risk management framework should be there. And review. Periodic review is very much essential. That's why we have audits, right? Third one. From the risk management point of view, the banking business line can be grouped as. So, banking business line can be grouped as what? Banking book, trading book, off balance sheet exposures. So, A and B only, B and C only. A only, and A, B, and C all. So what do you say about the risk management framework? Means from the risk management thought process, okay, point of view, the banking business line. What a business line means, whatever businesses are there in the banking. So they can be grouped under what? Yeah. What do you say? It is. It should be what? What do you say? Yes. Type in the comment section. Everyone, type in the comment section. Let me see. The answer is D. A, B, and C all of them. Okay, that is the answer. So it can be banking book means what? Banking book means which are statutory reserves, CRR, SLR. Trading book means what? Trading book means which are the proprietary reserves, means proprietary bonds. Means what? Proprietary bonds means which are purchased for selling, for earning the profit. So that is known as trading book. Off balance sheet exposure means this is related to contingent liabilities, means LC, bank guarantee, court cases, all these are off balance sheet items. Okay. So the answer is D, A, B, and C all. Next one. Which of the following is not the part of trading book of any bank, of a bank, from the risk management perspective? Trading book. Just now what did I tell you about trading book? Trading book means there are two books mainly, banking book and trading book. Okay. Banking book means compulsory reserves, CRR, SLR. Trading book means for profit. So which of them is not a part of trading book? Fixed income government securities, fixed term deposits, equities, and foreign exchange holdings. So think over it. Which of them is not the part? Yeah. Think over it, everyone. What is it? Fixed income government securities, they are not a part of this trading book, CRR, SLR, you can say. Fixed deposit. Do we purchase fixed deposits in CRR or SLR? Keep it very simple, isn't it? Do we purchase fixed deposits in CRR, SLR? Do we purchase equities? Are equities allowed in trading book? Are foreign exchange holdings allowed in trading book? Think of it. Very simple answer. Very simple. So the answer is FD is what is not allowed in CRR, SLR. FD is not a part of CRR, SLR. Never. It is not a part of trading book. Okay. Got it? Means trading book means basically for profits. Either in banking book or in trading book. Both. FDs are not allowed. Okay. Keep it very simple. So trading book means for profits. Okay. CRR, SLR is for banking book. But in both, FDs are not allowed. Okay. Next one. In the process of risk management, which out of the following order is correct? Now, in the process of risk management, I want the order: quantification, identification, control, and mitigation. Identification, quantification, mitigation, and control. Now, you watch remaining ones, you can read it. So what is the right answer? Yes. Very logical. Look at this. First, what will you do about the risk? Any risk when it comes, first, what will you do? Will you quantify? Quantify means calculate how much is the risk, how much is the effect on me, or will you identify the risk first? First is identification. So A is out. Now think of B, C, and D. Once you identified that risk, then what are the next steps? Will you control, or will you mitigate it, or will you quantify it? So step number 2 will be quantification. You will quantify it. Means you will see what is the risk level. Now third one, quantification. Here both of them are having the same B and C. Identification, quantification. Next is mitigate and control. So will you mitigate the risk first, or will you control the risk first? Always it is control first and then mitigate. So the right answer is C. Control and then mitigate. Okay. Control and then mitigate. So that is the right answer. Got it? Management of risk within a bank is to be a major concern of. So management of risk within the bank is to be major concern of whom? Top management, senior management, middle management, and operational management. What do you think who should be the most responsible for this or most concerned about this? Who should be most concerned about this? Yeah. What do you think? Most concerned. Okay. Forget about the bank. Let's say you are in a house, your own house. The risk concern will be mainly to whom? The risk concern will mainly to the earner or the owner of that house. Right? Similarly, board of directors is what? Or top management is what? Almost the owner. So it will be a major concern of top management. Always remember. Once it is a top management understands the risk as a major concern, it will propagate or mitigate the risk and percolate it down to the lower level, senior, middle, and operational. But the top management must first understand the concept of risk and how to mitigate it. Okay. Next one. Usually, a risk management organization in a bank consists of. So, what does it consist of? Board of directors, risk management committee of the board, RMCB we call it, senior level executive committee, risk management support group, operational risk management team, and all of the above. So here also think about it. Let me see how many of you can. I'll just wait for 1 minute. Okay. The answer is all of the above. Correct. I'm seeing in the comment section. Simple. Very good. All of the above is the answer because see here, the risk management process of in any bank, it will include all these board of directors here. The logic is like this or the sequence is like this. First it is board of directors. Below it there is RMCB. Below the RMCB there is a senior executive level committee, and then below that we have 3 other committees: CRMC, ORMC, and this ALCO, right? CRMC, CRMC means Credit Risk Management Committee. ORMC means Operations Risk Management Committee, and then we have ALCO, right? And below that ALCO there is another group, okay, that will support these committees. So the answer is all of the above. Got it? Simple. Next one. Which of the following has the responsibility for implementation of risk and business policies simultaneously in a consistent manner and decide on the business strategy to achieve these objectives within the bank? So, responsibility of implementing the risk and business policies simultaneously. See, risk and business policies are always opposite, roughly. Many times they are opposite. Risk means what? It will try to to avoid the risk. Risk management means, and business policy means it will try to increase the business. If you go on increasing the business, risk will increase. So generally they are opposite of each other. So we have to maintain a balance between these two simultaneously in a consistent manner and decide on the business strategy. So this business policies will decide the business strategy to achieve these objectives. So who is concerned with this? Board of Directors, RMCB, Senior Level Executive Committee, and Risk Management Support Group. What do you think? Right. I've seen, now what am I saying? Most of you are answering this board of directors. Most of you. Board of directors, I am saying in the comment section. Because I told you earlier that who is the head of the family? So that person is responsible. But the question is different over here. The question is of implementation. Implementation is not the part of board of directors. Board of directors will only think and decide on the policies. The implementation part is a part of even not A, not B. This is a part of C, Senior Level Executive Committee. This committee will see how to implement the policies given by the board of directors. Very important, isn't it? So the main job of Senior Level Executive Committee is to implement the policies. Okay, got it? Next one. The process of market risk management has the following parts: risk identification, risk measurement, risk monitoring and control, risk mitigation, and risk pricing. So what is it? Risk, okay, understand this. What all parts are included in risk management? Now, these are all the parts of or steps of risk management. Many of you are okay with 1, 2, 3, and 4. Means what? Identification, measurement, monitoring, and mitigation. But what about pricing? Many of us don't know what is risk pricing. Risk pricing means, what is CIBIL score? Let me explain you. What is CIBIL score? In CIBIL score, suppose if somebody's CIBIL score is, let's say, 800. 800 means that customer is good or bad. Type in the comment section, everyone. If CIBIL score is 800, that customer is good or bad. In the comment section, type everyone. In the comment section, yes, that customer is good or bad. Any customer who's having a score of 800, see here, it's good. All of you have written good, right? Second one, a customer is having a CIBIL score of 500. 500. That customer is good or bad? Comment section. Good or bad? Of course, bad, right? Customer is bad. Now the question, real question is ahead. If that customer with 800 score comes to you and a customer with 500 score comes to you, whom will you charge the higher rate of interest? Whom will you charge the higher rate of interest? Type in the comment section. Just type 800 or 500. Whom will you charge the higher rate of interest? Obviously, you'll charge 500, right? I am saying 500 answer over here. So 500 will be charged higher rate of interest. Why? Why are you charging 500 a higher rate of interest? Because his risk rating is low or his CIBIL score is low. What does it mean? We have huge risk on that customer. So as the risk on any customer goes on increasing, we increase the rate of interest. That is known as risk pricing. Okay. So that's why risk pricing means whenever any customer is more risky, we'll charge more rate of interest to that person. So what is the answer then? 1 to 5 all, 1 to 4, 1 to 3, and 1 and 2 only. So it is A, correct. 1 to 5 all. That is the answer. All of them are the parts of risk management. Okay. Next one. The market risk management policy formulated by board of directors of a bank generally takes into account. So not only market risk, forget this, the risk management policy. Okay. The risk management policy will take into account what? Forget all these, remove all this market. So the same logic applies to all of them. Any risk, all the risks are of the same format only. Okay, risk management policies, risk management procedures, aggregate risk limits, risk review mechanisms, and reporting and audit systems. So this risk management policy of any bank, which is designed by the board of directors. Here, board of directors will always think of the policies. Okay, so they'll have what? Policies, then procedures, then risk limits, mechanism, and auditing. 1 to 5 all. B is what? 1 to 4 only. Okay, 1 to 4 means reporting won't be there. C is 1 to 3 only, and D is 1 and 2 only. So what is the answer? Simple one, isn't it? Quite simple. Answer is all of them. Because here, why have I taken this question? This question is not for knowing that 1 to 5 is the answer or not. The main part over here is what does the risk management policy of the bank consist of? You must know these names. It consists of policies, it consists of procedures, risk limits, mechanisms, and auditing. Answer is obviously everyone knows it's 1 to 5, everything should be there. But you must remember these names. That's why I've taken this question. Okay. Next one and last one for today. Okay. Which of the following is not a part of role of asset liability committee ALCO in market risk management? So which of them is not a part of ALCO? Not a part of, we want not a part. So who is not a part of ALCO committee? Who means it's not a human being, it's a product. Product pricing of deposits and advances, setting guidelines for market risk management and reporting, funding policy and transfer pricing, and balance sheet management. So which of them is not a part of ALCO? Important one, isn't it? What do you think? Not a part of ALCO. What did I say? I just gave you some example of this. No, not example. I gave you the sequence. What was that sequence? First is board of directors. Then comes RMCB, right? That risk management committee to board. Below that, senior executive level committee. Below that, all this ALCO, CRMC and ORMC. I gave you that sequence. Just now I gave you. So this sequence, basically, what does it say about ALCO, CRMC and ORMC? These are all the operational level committees. Operational means whatever operation, branch level or HO level or anything related to operations. So these operational level committees, will they be the main part in setting the guidelines? Product pricing will be there, where they have to decide what is my asset product, what is my deposit product, what is my loan product, rate of interest. So that will be there. Guidelines for market risk management and reporting. Guidelines means what? Can the guidelines be set by this ALCO committee? No, ALCO committee is a operational committee. Guidelines are always set by the top board of directors. Okay, so this can't be the part of ALCO. Funding policy, yes. Funding policy means loan policy and transfer pricing. Transfer pricing means the rate at which the loans are sold to the treasury. See here, transfer means basically what? Retail or corporate banking. They will give the loans to the customers. Okay. And these loans are sold to the treasury. Sold, remember. So this is known at what rate are they to be sold? That is known as transfer pricing. Okay. And balance sheet management. So balance sheet management is also an operational here. Remember one basic thing. ALCO is an operational committee. So whatever is under operations will come under ALCO. Product pricing, it's a part of operation. Funding policy means how to give the loans, part of operation. Balance sheet, it's a part of operation. But setting guidelines, this is not a part of operation. This is a theory based or logical based or the policy based decision. Okay. So these were the questions for bank promotion risk management. Okay. Of course, we can't cover all of them. Okay, we try to cover the maximum, and in the next series also we'll be covering various other questions on various topics. Okay, so follow it completely. But before going, let me tell you everyone. Before going, I will tell you, join the bank promotion exams classes. Okay, now how to join this? Let me show you. Go to Adda. So friends, that was the session on bank promotion I'll suggest you to join the bank promotion exam batches which are going on right now. See here, I'll take you to Adda 24/7. There you see all the batches live. We are having various batches. Plus you are having Mahapacks as well. In Mahapacks you are getting multiple batches, and presently 80% off is going on all the batches. So let's go to Adda 24/7. I'll always suggest you to go through the app. In the app you get 1% extra using the coin systems. Okay. So go to JIB and CIB. Click on bank promotion over here. Bank promotion. Okay. Now you'll see the batches. See this PNB batch, SBI batch, then again PNB batch. So various batches you are getting. You can view all and see all the batches. Now if you click on this batch PNB, you'll see, look at the fee, 17,999 has reduced to 3,599. 80% off you have got. Prep 80 code is already applied. So what you get in these batches? You get 86 videos, 1 ebooks, then this online live classes, expert faculties, interactive classes, recorded videos. You get everything. Click on buy now. Then click on continue. Code is already applied over here. 80% off is applied. If not applied, you can apply this PREP 80 code. Okay. Click on continue. Fill in the details, full name, phone number, email, then make the payment and done. Similarly, you can join the Mahapack as well. In Mahapack, as I told you, you get multiple batches. See this, bank promotion, then bank promotion Mahapack. You get multiple batches over here, 16 ebooks, 270 videos. Plus, right now you are getting double validity as well as 80% off. Double dhamaka you are getting. Validity also double or discount also 80%. If you buy for 6 months, you get it for 12 months. So that's why join immediately. Okay. Because the exams are